What's good, everybody? Welcome. There I am. Welcome to the Closing Beat. Happy Monday. I hope you're having a happy Monday. I know it's a bit of a tough Monday here. And look, I made all these notes. I was going to go about this in a different way, but I think I'm going to change it up a little bit. As you can tell with the mic, it was raining cats and dogs earlier today. So I just was trying to find a way to make sure this could happen so the rain wouldn't be an issue. If the audio happens to be a little bit off, hey, let me know. I'll be happy to make some tweaks here along the way. So we're financial advisors. We help our customers here with investments. We're, normal sales pitch stuff that we put here. What I want to do today is I want to talk to those of you that have never been a part of a market pullback like this, right? I want you to understand how this works. And so normally what this is, this daily class, is really to help our customers. We just give them a daily update. They don't have to check in every day, but just to kind of see what's going on. And I do it for you guys as well. Goodwill marketing, I think you guys get the point. Hoping that you keep us in mind, you check out our website, all that stuff. But if you've never been through a market decline, there's people out there that are very nervous right now. And if the markets continue to sell off, they continue to be nervous. And so we're teaching advisors. And so normally this is where I get really excited and I start teaching all of our customers, this is how it works. Look, if you just joined us and you're brand new to investing, this is how it works. And I'll give them stats and we do all kinds of emails and extra classes and stuff. And that may be the case. We may be about ready to pick that back up. But I'm going to start today by just sharing some information with you guys. I'm going to jump around a little bit because I want to make sure we cover everything as well. But if this is your first time seeing the markets pull back, right, because you just started investing this year, you got excited, started your new account. Well, first of all, I want you to keep track of how you feel, right? You're scared. You see the markets, bottom right-hand corner of your screen. You see the markets didn't do a whole lot of nothing today, but stay red and in a big way. So I want you to know how you feel. I want you to see what you see on TV. I want you to hear what you hear on the radio and go, okay, I'm a little nervous. What do I do about this? The Dow fell 616 points. It actually fell over 700 points today, and you're going to see on TV, I don't know, maybe later or at some point, especially on Bloomberg, they're pretty good with stats, you're going to see them say that that's only happened 7 other times in history, right? So if you were to see how many times has the Dow fallen 700 points, that's only 7 times in history. Well, today's the 8th, right? So that's going to present even more emotion. And I want you to go through this and kind of remember how you feel, because it was funny today as I was super busy because all of our customers were like, I got a deposit coming in. Can I get it invested today? Oh my God, I see this discount. They were excited because the last October, November, December drop, I was actually walking them through the process, not from an opinion standpoint of what I think they should do, but from facts, telling them how this works, what the markets do, and exactly, when they do them historically. So it occurs to me that there are people watching this today. I want to make sure you have this sort of strength to pull through whatever you're doing, wherever you're investing. And just ask yourself, does your advisor help you with this kind of stuff? Do they help you? Do they call you today and help you not jump off the cliff? And the way we do this is we just start with the next day. All right, the Dow was lower by 600 points today. We're going to use percentages today because the numbers are so large. 2.33%, 2.5% on the S&P, 3.5% on the Nasdaq. So you go, oh my gosh, what do I do with this, man? That's just incredible. That does not normally happen. So let's just start with the next day. Okay, when the markets have a bad day like this, what's tomorrow look like? That's all we can do is just look one day ahead. Let's start with that. So over the last 10 years, when the markets, the S&P is what I'm talking about, has sold off 2% on a Monday, that Tuesday has been positive 80% of the time. So there's 15 times in history that that's happened, and 11 of those times, the very next day was positive. Average gain was just over 1%. That doesn't help a lot because it's only one day, right? And if we sold off 2% on a Monday and we averaged a 1% gain the next day, well, that means we didn't gain back the losses on the next day. Perfect, right? So right there, odds are tomorrow's going to be positive. And if it is positive, I don't expect to see it recover all that it lost today. If it does, hey, that's great. But if we got to go by stats, we got to say, okay, probably not going to happen. If we look out further now, we just took one day at a time. We say, what happens tomorrow? Now you know. Let's go out a week. Let's say by Friday, what happens? Well, over the last 10 years, we end up higher almost every single time. There's only one time we didn't end up higher at the end of the week. 3.2% is the average gain, meaning by the end of the week, we have recovered, right, what we lost on a Monday, and historically we've done that every time but once in history. If you look back 25 years, go even further, it's almost 30 years now, the stats are basically the same. Meaning most of the time, the next day is positive, you get a temporary break, you get to relax. You go, oh, okay, well, yeah, that was a bad Monday. Tuesday was okay, and we're starting to make some ground. And by the end of the week, historically, it's positive by the end of the week, right? So that's a short time period to have to look at. I get it. A lot of you guys are long-term investors, but I just wanted to start with that. Real simple, right? Let's just walk one step at a time. All right, let's dig into the good stuff here. I'll give you some more stats along the way because you know that's what I spent my day doing, was just tracking things. How were we doing? By the way, if you're one of our customers, look at our performance, the market overview, which was 2 classes ago in the dojo, and that'll actually show you how May performs historically. It's perfect. So far, it's almost right in line with the average, and now you know if we're going to bounce, exactly when it's going to happen relative to history. We plotted every single day for the last 20 years. We went day by day and said, here's the average performance, this is what the market does, and there's a story to be told in there, so I did cover it. I hope you'll check it out. Anyways, you see the market's down lower on the day. Zero attempt at a bounce. Look at the chart in the bottom right-hand corner. That's a 5-minute chart. Every 5 minutes, we put a little blip on the screen, and it shows nobody wanted to buy this markets today. Tariffs, right? China fighting back with the tariffs, although it was a weak slap in the face. So we put a bunch of tariffs on them, raised it to 25%. They basically came back with like take that, and they threw a rock at us. We threw a boulder at them, and they threw a rock back at us. So really overblown in the short term. Now, the tariff things, if you're also brand new at this, what it means is higher costs for companies that get a lot of their products from China, all right? So like Apple. Apple's crushed today, right? So more costs for them. If they have higher costs and they can't pass that on to the consumer, it means lower earnings. It means they're going to make less money. Well, if they're going to make less money, it means the company's not valued at as much as it currently is valued, right? It's valued because of expected earnings. If we now expect those earnings to get lower, it's only natural that the price of Apple drops to a point where there's now a value relative to the earnings that are expected there. So short little explanation on that. Let's take a look over here at the S&P 500. I'm using the SPY to check this out with you. I don't think I can look at the index with our dojo here. Yeah, unfortunately I can't. We like to use the ETFs here. But so if you take a look at the SPY, we're back to 280. I pointed out last week that this market looked like it wanted to go to 2,800. Well, today it hit 2,800, almost perfectly hit 2,800, found a little intraday support. I kind of expect it to push through 2,800 a little bit if you're following up with that. I don't think it just stops on a dime and turns around there, but I'm not supposed to really say that sort of thing, so I'll move on. The Dow fell lower by 2.5%. Like I said, this is the 8th time it's ever fallen 700 points intraday, but let me not scare you with that. 700 points, you go, well, this has only happened 7 other times. That's freaking scary, right? So you get a little bit nervous. However, it's fallen 2.5% almost 500 times in its entire history. That's the oldest index out there, the Dow Jones Industrial Average. It's fallen 2.5%, 500 times in its, almost 500 times, like 476 times. So one stat makes it seem scary. The other stat makes it seem like, this kind of happens, right? Because the Dow's been growing over time. So not really a big deal in terms of drop. I get it hurts right now, but not really that big of a deal. So there's the Dow back to the 200-day moving average. The Nasdaq getting hit the worst and probably has a little bit more to go because that's tech heavy, that's tech product heavy. So some imports issues going in there, some tariff adjustments, I should say. Now, last week was the worst week of the year so far for the markets. It is actually now, last week I was saying May, we're on start for the worst May in over 9 years. Now you have to bump it up to almost 50 years, the worst start to May in almost 50 years, which is not really good. The problem with that is this week, historically, is the worst week of the year. So we just got started here, and so far, well, history has proven itself. But although last week was the worst week of the year so far, historically, look back on the S&P 500, this 1 week right here is the week that usually is the worst week of the year. Good news there is Nasdaq is positive, right? Well, let me stop for a second. If you go back over 30 years, it's the 14th worst week on record. So it's not supposed to be a good week anyways if you track that sort of thing. Now, here's why I say this is kind of good news. If we look, the Nasdaq is historically the best performer during this week. Average gains just over 1%. Biotech, by the way, is your best performer over this week, or historically is the best performer. Why is that? There's a biotech conference coming up, and investors and hedge funds like to position ahead of that if they get a little hint of what news is to come. So the good news is this sector has already pulled back. So if history is going to repeat itself, people are already getting a discount. I don't know. There's a lawsuit that came out today on some of the generic brand biotechs. We'll cover that in a minute. I don't know if that messes with the stats or anything. But the good news is if these are going to be the better performers, they've already pulled back. They've attracted interest already so far. REITs tend to be the worst performer, and VNQ, the Vanguard Real Estate Fund, tends to be the worst performing ETF during this entire week. So far, so good, right? It hasn't really done anything bad there. So not horrible, but you should know the stats, of course, going forward. You want to know what you could expect, or at least I like providing them to you. So whether you like them or not, they're going to keep coming. Now, sector-wise, if you look over here off to the right, almost every single sector, besides utilities, has given back their April gains, right? So, for example, semiconductors were one of the worst areas today, selling off almost 5% on the day. They have officially given back all of April. You go through all the sectors, and you basically could just make a blanket statement that every sector has now erased all the efforts and the gains that it saw in April. That's not good unless you like these sort of pullbacks where you can buy a little bit more. The SMH, by the way, or semiconductors, obviously heavily involved in this trade war thing back and forth. They are officially back in correction territory. I believe it's pushing around 12% from these highs here. So you'll probably start seeing more of that. And if you follow financial media, they're going to start pointing out all the sectors that get back into correction territory, which is just a fancy way of saying they've fallen 10% or more from their high. So here's the high back for semiconductors most recently. It's fallen over 10%. It's officially in correction territory. Little lesson of the day for you. Oil. This is a nasty day for oil, by the way. If you're a technical trader, nasty. Oil started higher. We had some overnight news. Saudi Arabia, cool little sabotage thing going on there. If you want to read stories like that, 2 Saudi Arabian ships were essentially sabotaged you got to read it if you're interested in that stuff. Anyways, so oil was higher based on that news, as it tends to be when there's things like that come out. However, we come out this morning, China very craftily puts their retaliatory trade tariffs on just before our markets open. Aren't they supposed to be sleeping? And so you had oil just completely reverse itself. From a technical standpoint, technical traders will be saying, yeah, that looks like it's going to be heading a little bit lower. So if you like the lower price of oil, congratulations. You're going to get to a lower price of oil. So looking good there if you like that sort of thing. Uber, by the way, holy cow. Uber, horrible day, about 11% loss on the day. I didn't even look at Lyft. I'm assuming Lyft sold off as well. Let's go back and zoom out for Lyft. That's going to be new fresh lows there for Lyft. Not looking good for the ride-sharing companies in the short term. However, I was having a discussion with a customer today, and they really like the idea of buying Uber, and I was like, look, I'm not going to tell you should. I obviously have my opinions, but we can talk about it. And we talked about the idea that at some point Uber becomes attractive, right? You can put all the arguments fundamentally aside, but at some point we start losing, an average of say 7% a day at this point. Granted, there's only 2 days, but you start shaving off that kind of price. At some point you go, okay, that's worth a shot. I'm not saying now's the time, but anyways, this is now, I believe it is now officially the worst performing IPO going back to 2010. It was down 5% this morning before the markets even opened. Uber was already down 5%, and Uber is like, well, what are you going to do? Stock markets are weaker. They're blaming the whole thing on the stock market. Okay. Apple, let's not go that far. Let's go zoom in here a little bit. Apple breaking below the 200-day moving average and the 50-day, so a big deal there. A little extended in the short term. That's a bad day for Apple. Apple doesn't have 6% losing days very often. I didn't have time to run any studies on that one, but I just know that is way outside of the norm. So if you like Apple discounts, that's a good news that you go, well, how often do I get a 6% discount after already falling that much or a little bit more than that? So I don't have any comments on that one, but it's a strong discount there. And then Teva Pharmaceuticals, this is one of the generic drug makers. Off the screen, huh? Wow. Down 15% on the day. Teva and Mylan, let me see. Mylan as well. Yeah, new lows as well, 10% on the day. Apparently, there's a lawsuit by a few different states that are like, hey, you guys have been messing with drug prices. You've been trying to work together to keep drug prices high. I can't think. Antitrust laws coming into play there. So I don't know. Like I said, I don't follow the drug makers all that much. I could tell you Mylan has a reputation problem, just like Wells Fargo does. It stems back to the EpiPen dilemma that was a couple years ago. They've got some work to do there. Disney lower by 2% on the day. I think most of that's market driven. They've been doing great at the box office. 63.1 million in ticket sales over the weekend for the Avengers Endgame. So that's 3 weeks in a row that it's at the top of the box office if you follow that sort of thing. And then finally, look, here's a great example of you focusing on what the media wants you to focus on. We're all scared. Oh, man, the markets are falling. That's crazy. But meanwhile, if none of this was going on right now, do you know where all the conversation would be? 100%. It would be on Bitcoin. Did you see what Bitcoin did today? Got like zero press coverage at all because, well, that's not selling commercials. Right now, what's selling commercials is if we change the graphics on the screen and make them all red and put that big bear that does the claw thing, that sells commercials because people are watching. Nobody wants to hear about Bitcoin up 26% on the day. Huge rally for Bitcoin. Very, very... it's not something that I get excited to follow, but it's on my screen and it shines bright green and bright red when it has these big days. So definitely something that would grab your attention there. There's also a conference going on in New York, which is sort of overshadowing all the scandals going on right now. I don't know if you guys have been hacked and lost some of your crypto, but they got some issues going on there, and they'll work it out. I'm not like anti-Bitcoin. It's just when things are brand new, there's a lot of volatility there. There's a lot of unknowns. There's no hurry, right? Like Uber and Lyft and stuff. There's no hurry to have to invest in these companies. It just doesn't, there'd be time. Easy. Do your research. I'll be happy to answer any questions. I'm sorry if a lot of the comments are going by. I may miss some of the questions. Michael says, have you ever done a video on a currency hedged ETFs and how they work? That's a great idea, actually. I like that one. You see the dollar versus the yen, whether you use an ETF or not. Which currency to use for the hedge? It's an idea. It's really, really particular. I like that sort of thing. It's something I could definitely add some value to, I think. But no, actually, I haven't done one so far. Yep. Some Bitcoin comments there. You don't think it'll go to 100,000? I think 20,000 is the number everybody's shooting for here in the beginning. Days like today, keep that up. I don't see why. But it's all speculation, right? And here's the argument that I have. If you like speculating on things, such as sporting events, if you're one of those type of... There's nothing wrong with that, by the way. If you like to make wagers on what you think Boeing or Disney or whatever may do, nothing wrong with that, but compare Bitcoin to the futures market, right? You could go speculate there too, probably for a lot less money. Just saying. I'm not telling you what to do. The scary thing is, Chris is saying, the scary thing is Bitcoin could drop 25% in a day or two. Yeah, you're absolutely right. And people got a chance to see that. So now with this little history in Bitcoin, yeah, you got some back and forth. You know the good can come with an equal bad or more. So I totally, I like that. I like your comment there. Yeah. Recognize the volatility on whatever it is you're trading in the first place. Financial Investor says, if you look at FinBiz and then look at the entire S&P utilities and like one REIT, right? There was like one REIT in the healthcare space, I believe, like nursing home space that was green. Yeah, basically. Verizon, I think, held in there today. It wasn't green, I don't believe, but Verizon held in there. Only lost 0.25%. I think you could look at names like General Mills. Did that hang in there? Oh, that gained. General Mills got a nice little, maybe a technical breakout there. I just looking at the chart, not a suggestion. 0.5% gain on the day. So there were like very, very few tiny bright spots. General Mills is in the consumer staples category, by the way, so you kind of understand why a little run there. And I didn't catch why. I saw Newmont Mining up 2.5% today. Now that area has been sort of crushed, but in the gold miners, GDX is one way you can follow that. Gold miners as a whole did well, and a lot of them have really, really struggled lately. You're talking about My favorite gold miner from back in the day was AUY, and I saw that was trading at $2. $2. That's kind of crazy. But all the gold stocks getting at least a little recovery here today. GDX would be the ETF to check that out. Coke still rallying. Is Coke still hanging in there? Yeah, not bad. Good. Yeah, another consumer staples name. So that category hanging in there just a little bit. Only lost 1% on the day, and has done really well, by the way. Yep. Let me see here. All done there. Any note on how the U.S.-China trade war could affect the small caps? Not as bad, right? Because they're domestic. I mean, small cap companies can still get products outside from China. However, the Russell 2000, in my opinion, small cap stocks, they have other problems at the moment. They've got some other problems to work through. That sector it could be, again, that we look at the Russell and go, darn it, that thing was telling us the markets weren't going to go higher again like it did back in October. Yep. Cool. Yeah. Jose talking about when's the plunge protection team coming in? You know, the plunge protection team for the it's so funny. The plunger group. They essentially have been replaced by Trump tweeting. That's as simple as you can say it. If Donald Trump wants the markets to rally, all he has to do is pick up his phone or get the guy that tweets for him to say a few things, and that would do it. And I think that is really what investors will respond to. It's sad. It's really sad, but that's what investors will turn to. If he tweets anything, that can help. Now, I think he'll hold off. He'll make some comments. Of course, he has to tweet. I know that's his thing. But I think that there is still room to allow for people to just make their own decisions for now if it helps negotiations. And by the way, this trade war negotiation thing, this isn't going to end by the end of this week. It's not going to end in the next 2 weeks. This is now stretched out to the G20 meeting from his comments today. And, so it seems like, although they may travel back and forth and put on a good show, yeah, it's going to be a while. Thomas says, Boeing? What about Boeing? So Boeing continues to sell off after the retail traders get out from breaking through the 360 area. You'd expect weakness on that one like a day like today. You'd expect that to be a problem. From a technical point of view, there's not really much to stop it. You can use some Fibonacci numbers there if you like using technical charts there, but how do you like $300? Would you buy it at $300? How do you feel about all these financial services coming into crypto? I'm all for crypto becoming a regulated sort of an option that people can use. There are 2 crypto ETFs that are just filed Friday. And for Bitcoin and Ethereum, I think, or crypto with blockchain built in, I forget. But there's 2 more coming. Well, if the SEC approves it, I'm all for this sort of, letting investors into it. You just got to understand what it's used for. It's like the leveraged ETFs. I'm all for leveraged ETFs, but you got to know what you're using them for. You don't just buy them and then sit back and wait and see what happens. They have their place, right? So I'm not opposed to it. Not at all. I'd be more excited from an investment standpoint if people would start adapting it. If we could start using it more for payments. And again, I'm not a Bitcoin guy. I don't ring the bell when it does well. I just think, like anything else, it's got to have a use. Have you looked at Zyme? No, sir, or ma'am, whoever that is. I do not. It's in the biotech space. I would not. I've seen the performance. It comes up on the on our radar that it has been just killing it. I see what's going on. I just don't do research on things like that. I don't like the biotech space. It's like a doctor. You could be good at your specialty, but you'll stay away from surgery, right? If you're a nephrologist, you'll stay away from surgery, and rightfully so. But that's kind of my thing. I just stay away from biotech. I choose not to look at it too much. I don't do videos on it. I don't comment on it very much. I don't pretend to understand it, and I don't like it. Some comment. Okay, perfect. There. Perfect. Well, I think I've covered most of it here for you today. Like I said, if this is your first time going through something like this, start with tomorrow. Odds are tomorrow's going to be positive. Doesn't mean it's going to start positive, but odds are it's going to be positive. the end of the week. You've got the sort of support on your side, and then you can start to look at it further and further and go, oh, okay, this is just a little blip along the way. I understand how markets have to move, but anyways, just thought I'd walk you through that here today. I really appreciate you guys watching. We'll be back tomorrow, of course, to do this all over again. How could you not come back tomorrow, right? With the excitement. You've got earnings coming out tomorrow, only a name or two that are really that interesting. So that won't be too big of a focus. Take-Two Interactive, I think, was after hours here. Stock was down a little bit. And so you're going to have that. You're going to have that. You're also going to have the markets here just trying to price in if earnings are coming down as a whole and tariffs are going to hit. Imagine the math these people are doing. We're repricing the markets. That's it. Repricing for what the markets may be worth at this point. So I appreciate it. All right. Have a great rest of your evening. I appreciate you watching, and we'll talk to you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.